there, good afternoon. You're watching Closing Trades on ET Now. I am Snehi Shah, and well, this is the show where we are going to be tracking the last leg of the market today and tell you everything that's been happening on that front. But first, before we do that, let's take a look at what the Nifty is doing right now. Absolutely under pressure, 0.3% lower off the highest point of the day. And in fact, we are at the lowest point of the trading session right now, even struggling to hold above the 26,250 mark for now. Nifty Bank, remember, this index opened with gains of about 0.8% at open, and it has reversed all of those and not only lost all of those gains, but we've now dove deep into the red. 0.3% cut on Nifty Bank. So some of the names where we were seeing a lot of outperformance, HDFC Bank, for example, is lower by 2.25%, slightly muted set of quarter three updates, if you could call it that, reported this morning. Sensex to 0.3% lower. The India VIX has cooled off very nominally. It was up about 8.5% earlier. It's higher by about 6.5% now, but we still continue to hold above that 10 mark. But yes, needless to say, the advanced decline ratio is now in the favor of the declines, and that is what the market breadth is looking like. The Nifty mid-cap index is also lower by 0.3%. The small cap space, however, is holding its own in a market like this that's largely sideways. A 0.3% uptick coming in on the small cap space. Taking you through some of the gainers and losers from the Nifty 50 group of stocks, it's names like Nestle that continue to do very well. A 3% uptick coming in on Nestle, and in fact that good update from Marico has cheered a lot of these FMCG names. BEL, Aisha, Ultratech, Asian Paints, Tata Consumer, HUL doing well. So Nifty FMCG all in all, with names like HUL, Tata Consumer, Nestle, it's doing really well. It's the second highest top sectoral gainer right now. First one being Realty. Clear outperformance by Sobha, 4.5% uptick, wherein they've clocked quarterly sales of more than 2,000 crore rupees yet again, and looks good for a stock like Sobha, 4.5% higher over there. Lodha, Prestige, Godrej Properties, DLF, all of them seeing the rub-off effect. FMCG then, Nestle, Marico, Britannia, Tata Consumer, all of them are doing well. Followed by that, you have some of the auto names, Aisha, Maruti, Uno Minda, they're all doing very well. And metals continue to be resilient as well. Hindustan Copper, APL Apollo, Tata Steel, SAIL, Jindal Steel, all of these are stocks that are doing well. What's on the flat line is Pharma and PSU banks today. PSU banks at one point were doing phenomenally well for themselves, but it's only Union Bank and SBI holding on to greens now, with big cuts coming in on UCO Bank, Punjab and Sind Bank and IOB as well. Followed by that, you have Nifty Bank, Nifty Energy, and of course Nifty IT continues to be the top loser of the day, as has been the case throughout this entire trading day, with cuts now amplifying on Infosys and HCL Tech, along with the Wipro 2% cut over there, 1.7% cut on Persistent. Coforge is lower by 1%. TCS also seeing some cuts. So yes, the entire IT pack is under pressure today. Just talking about some of the value retail names, it's V2, Vmart and Bazaar style retail. Let's pull up all of those stocks and see what's happening. Vmart was doing pretty well for itself. It still continues to do so, 4.5% uptick on that one. V2 retail is under pressure, 2.5%, but the real one to talk about today is Bazaar style retail. The massive cut that we've seen on that one. Avenue 2 is lower by 2%. No surprise over there, the revenue deceleration continues. Store addition has mildly picked up, so nothing meaningful over there. But let's fire Bazaar style retail and see what's happening over there, because very big cut coming in on a Bazaar style retail also right now. It's 6.25% lower on that stock on the back of a negative 14% triple SG. But Sobha, we've been talking about this stock, and Realty is seeing a little bit of action coming back to that space after quite some time. And this is Sobha that we're talking about. It's posted record quarter three sales, crossing the 2,000 crore mark for the second time, like we were discussing earlier. Average price realization has also risen. Bengaluru has also done pretty well for itself, supported by the new launch of Sobha Magnus. Let's bring on board Rabinder to take us through all of those details, the quarter three update, what brokerages are making of it, and of course why the stock is doing so well today. Rabinder.
Well, it's on the back of strong Q3 FY26 business update. Sobha Limited is in focus, where company has registered its best ever quarterly sales value, crossing the 2,000 crore mark for the second time, while its share of the sales value also stood at an all-time high level. And the company's real estate operation has now expanded to 13 cities across India, with the recent expansion in the Mumbai region. And average price realization has improved to 15,436 per square foot as compared to 13,660 63 per square foot last year, indicating a strong pricing interaction. And in Q3 FY26, the company has completed 1.39 million square feet, delivering a 915 homes, taking the cumulative completion for the 9 months of FY26 to 3.64 million square feet with 2,100 home deliverable. And if we talk about the performance of the company on a regional basis, then Bangalore recorded its highest ever quarterly sales growth of 51% year on year basis, adding to 1512 crore with the new sales, and NCR contributed to 349 crore, which is backed by successful launch of Sobha Strada, a service apartment project located at sector 106 Gurugram, and Bangalore and NCR both the region has contributed to 1861 crore out of the total sales value of 2115 crore in Q3 FY26, and Kerala region has also added 154 crore, which is up 18% year on year basis. And for the 9 months of FY26, the company has achieved a sales value of more than rupees 6,000 crore. And in Q3, company has launched three new projects in the three different cities. First is Sobha Magnus in Bangalore, which is a luxury residential project with the land area of 5.78 acres. Second is Sobha Strada Gurugram, which is a commercial and service apartment project, which is with a land area of 2.03 acres. And last is Sobha Inizio, which is in Mumbai, and it is the first Mumbai residential project for the Sobha with the land area of 1.03 acres. So on the back of the strong Q3 FY26 business update, Sobha is in focus, and the stock is up more than 3.5%.
Rabinder, thanks so much for joining us with all those details. The stock, of course, is up 4.5% on the back of very strong operational data that the company reported for the third quarter. But we have Kunal Bothra now joining us in the studio. Kunal, afternoon. We'll talk about Sobha in just a bit. But before that, your thoughts on the index level, both Nifty and Bank Nifty?
Yes, I'm not surprised with the action today on the indices, purely because, at the start of the day, one of the major readings for the markets was that the put call ratio for the Nifty on the current expiry was almost at 1.7 to 1.8. Now that's a very steep kind of a put call ratio on the higher side. So my expectation was that the markets would probably just want to moderate today, and that's why right from the start you saw many of the large cap names, they were missing in terms of price action. So there was an initial bout of a mild gap up to say for many of these large cap and individual themes sectors, etc. But then there was no follow through price action. Immediately in the next half an hour or so post the open, we saw the most of the stocks going to some bit of profit booking or some bit of consolidation or cool off from the starting highs. So that itself indicated that the markets are likely to go into more of a moderation. I think this process would take maybe another day odd for the index because Tuesday is generally the fresh expiry for the weekly options. So I think tomorrow I would expect the index to just about hold on to this range. 26,200, 150 thereabouts is a good support for the index on an intraday basis. In case if on the spot levels we drop between this band of 50 points, 26, 150 to 200, that's a very good zone for contrarian traders to go for a contra buy.
Okay, so that's the take coming in on the market, and Kunal, it's proving to be a very tepid expiry for us today. 26,200 is, I mean, we're close to that mark, and it seems like that's a difficult mark to defend right now as well. But you're reading on the India VIX, Kunal, we've been talking about this for some time now, a 7% jump today and around that 10 mark. Does this indicate that there is more action in the market? People are now coming back after that long holiday, if that's how one should be reading it?
Yeah, that is one way to read it, and the other way to read India VIX, where I would believe is that now we'll be heading. Now the markets will be looking at two major events. One, of course, is the quarterly results, which would start to flow in for the overall markets, and then heading into the budget event. So it's bound to be that going into this kind of a major event setup, that the India VIX doesn't remain at sub 10 mark or 9.5, 9.2 levels, which we were trading as a fag into the month of December. So I think this is a way in which the markets are just about trying to reprice or adjust with the kind of events which is lined up. I think over here in this sense, the initial bout of move is that the India VIX moves up higher, the index cools off a little bit, tries to moderate, but then the second round of India VIX generally leads into a direction in terms of the trend. So we need to wait out for a point where the index gathers momentum and comes back into a breakout about 26,400 mark. Once that happens, that's where I would believe that there could be a much more stronger and a more impactful breakout which could happen for the Nifty.
Okay, so that's the view on India VIX that has seen quite a bit of uptick today. But we were discussing about Sobha and the stock is up 4.5%. Kunal, technically, what is your view on this counter?
So it seems like that after that initial bout of gap up, the stock has not seen any major kind of an intraday, jump in terms of the price action, because it opened at 1550 levels thereabout. There was a movement of another 8-10 points on the higher side, and then a mild dip. The volumes have improved higher today, but then what we've seen historically is that after such kind of a strong gap up move, when the intraday action is missing into the stock price is generally going to a moderation. There is a mild, very mild kind of a profit taking which happens over the next couple of days. So I think that setup would probably be something which I would wait out for, and that's why I would not initiate a buy on Sobha even after this 4% gap up and a strong uptick which the stock has been holding on to. I think one needs to wait out for at least another 20 points to 25 points drop on the stock price closer to 1530, 1525, where I would believe could be a good zone where traders could look at a contra buy.
Okay, so that's the take on Sobha. Kunal, amid a market like this, where we've seen a little pullback today from the day's high, and any fresh buying opportunities if you're spotting?
Yeah, there are a couple of them. In fact, Crompton is something. So, Voltas, Blue Star, many of these stocks are seeing buying action. Crompton on the short-term charts is forming a bottom at 250 levels thereabout. So, keeping 250 as a stop loss would suggest a buy on Crompton for a near-term target of 268, 268 to 270 zone. The other is a buy on HAL, because I would sense that many of the defense stocks have come back into forming a near to medium term bottom for themselves. There has been a decisive up move for many of the defense names on the short term charts. So would look out for a buy on HAL for a target of 4,650, stop loss at 4,400.
Okay, so those are some stock specific ideas coming in from Kunal, but let's shift focus and let's put the spotlight on Coal India then. The stock was up 6% on Friday. Although we have not seen any action, but there's this initial public offering of Bharat Coking Coal, which remember is the wholly owned subsidiary of Coal India, and it has announced the price band for its upcoming share sale at 21 to 23 rupees per share. We caught up with the management of Coal India and Bharat Coking Coal to understand the timeline, the volume growth and the capex plans that the company has. Let's go across and listen in to what they had to say.
Year to year, we will improve at least by 2 million tonne, and around 29-30 our production target will be 54 million tonne.
Our capex plan is close to 1,000 crore rupees per year. And the main outlay for capex is for building up our washeries and getting land for the mines.
In the first half, as we slipped the production target, the reduction in the e-auction premium has led to the reduction in the EBITDA in comparison to the previous year. But if we will go to the whole year, because we had already ready with the OB exposure, more coal will be extracted, it will be covered up. And the coming year, as we are going for the more wash coal sale, EBITDA is projected as per on increased coal production of the wash coal, that will give a volume to the EBITDA.
Okay, that's the word coming in from the management of Bharat Coking Coal, a wholly owned subsidiary of Coal India that's going to be listing soon. The book is going to be opening for retail subscription on the 9th of Jan, and for anchors it's going to be opening on the 8th. But Kunal, give us a chart check on Coal India. Let's talk about the parent company. Last 1 year, absolutely no move, was 6% uptick coming in. Okay, so it's a 12% uptick coming in the last 1 year. In the last 6 months, it's not done all that much. But give us your sense on what the charts are looking like, because recently in the last 1 month or the last couple of weeks, the stock has done very well on the back of this news flow.
Yeah, it's done phenomenally well. So I think I remember very clearly over the last 4 quarters, there was a 40-point range for Coal India, 355, 360 on the lower side and closer to 400 on the higher side, where the stock was taking resistance. Now, to end this 40-50 point range for Coal India, which the stock has been going through, required some sort of a news flow event surrounding the stock prices, and we saw that happening for the stock price. So now we are looking at 400 as a very strong support base for Coal India over the near term, and my sense is that the stock would probably go into the higher end of the band. 450 is where I would expect the stock to head towards. To add to the fact, what happened on Friday also was a major jump in the open interest for Coal India. I think if I'm not wrong, there was almost 7 to 7.5 odd lakh futures addition which has happened for Coal India on Friday's move, and that's where the stock showed I think an up move of 5% plus on intraday basis. So that itself substantiates the move that we are looking at about, where the stock has seen fresh longs on the F&O side, and this could have a positive effect on the stock price going forward.
Okay, so that's the technical view coming in on Coal India. The stock currently trading at 426, and we've seen quite a bit of value unlocking that has taken place over the last few days, and perhaps the trajectory is likely to continue going forward as well. On that note, we need to slip into a very short break. More news and updates will continue on the other side. We'll put the spotlight on a whole host of other buzzers. Don't go anywhere. Welcome back. You're still tuned into Closing Trades right here on ET Now, and we have a whole host of individual stocks which are buzzing in trade based on news. Which are those and what are the factors driving the move? Rabinder is now joining us to decode exactly that. Rabinder?
Yes, lots of the mid-cap and small-cap banking stock is in focus on the back of the strong Q3 FY26 business update. First is Ujivan Small Finance Bank, where bank has reported their Q3 FY26 operational update during the weekend. And in Q3, bank's CASA grew by 22.2% year-on-year basis at rupees 42,419 crore, and gross loan book was up by approximately 21.6% year-on-year basis at 37,055 crores. So back of this strong operational update, Ujivan Small Finance Bank is in focus. Another stock is in focus is CSB Bank, where banks reported a strong Q3 FY26 operational update, and in Q3 the bank's total deposit saw an uptick of more than 21% year-on-year basis at rupees 40,460 crore, and bank's CASA was up by 3% year-on-year basis. So back of this strong Q3 FY26 update, stock is in focus, and the stock is up more than 7%. Equita Small Finance Bank is also buzzing on the back of their strong operational update, where in Q3 the bank's gross deposit grew by 10.6% on a sequential basis, and on the back of the robust disbursement of rupees 6,557 crore, which is with the growth of 22% on a quarter-on-quarter basis and 28% year-on-year basis. And if we talk about some of the other stock that is in buzzing on the news of the on the back of the news flow, first is some of the solar manufacturing stocks is under pressure, like Vari Energies and Premier Energies, where Bernstein has come out with a note, and they have maintained their underperform rating on both the stock. For Vari Energies, they have maintained their buy rating, underperform rating with target price rupees 2,109 as compared to 2,087, and for Premier Energy they have maintained the underperform rating and cut target price rupees 718 as compared to earlier target price rupees 780. Amba Enterprise is also in focus, where company's subsidiary has received formal approval under the electronic component manufacturing scheme, and the approval marks a significant milestone that will accelerate the localization of the critical electronic components. So back of this stock is also in focus. Another stock is in buzzing on the back of their order win is Bondada Engineering, where company has received a LOA worth rupees 627 crore from the Andhra Pradesh Transmission Corporation. So back of this stock is also in focus. And lastly, KPI Green is also in buzzing, where company's subsidiary has achieved a significant strategic milestone with the receipt of LOI from the Gujarat Urja Vikas Nigam Limited for the development of the self-owned IPP standalone battery energy storage system project with an aggregated capacity of 445 megawatt to 890 megawatt. So back of this, KPI Green is also in focus.
Okay, Rabinder, thanks so much for taking us through that. So yes, lots of stocks that are buzzing right now, but let's delve deeper into the market setup and take a look at what lies ahead for us in the near to medium term. We have Mr. Abhay Agarwal, founder and fund manager at Piper Serica, joining us on the show. Abhay, hi, good afternoon, and first of all, wishing you and your team a very happy new year. Thanks so much for your time today. Let's get a better sense on where the markets are headed. We started off pretty great. Friday, a fresh all-time high. Today, too, we managed to touch a fresh all-time high on the Nifty. But help us understand by how sustainable is this going ahead? Because after touching that, we've given in to the expiry pressure. We've seen a pullback. And this is not only today's trend. We've seen this play out for the last couple of weeks. So what do you think the market structure is right now? Is there temporary strength, or do you believe the weakness is more temporary in nature?
Good afternoon. I think we have been seeing this, in fact, in the last couple of weeks of December also, that the markets have very strong support at 26,000 levels. where the domestic flows are adequate to keep it at that level, not let it fall. Our problem has been for the entire last year also is that we saw $18 billion of FPI's outflow. And I think that outflow will not reverse, it will not become an inflow till we have a trade deal in place. So I think the foreign investors will sit on the sidelines, will wait for not only just potential announcements, of advanced discussions uh, and expectation being created that the trade deal will be signed at any point of time. But I think it is now about time that, for the markets to break out and consistently scale new highs. The FPI flows are critical, and that is why the trade deal becomes critical also. The fear is that if the trade deal is getting delayed, why is it getting delayed? And will it lead to US putting further penal tariffs on Indian companies or Indian exporters? So I think this is what is keeping the markets from going on a secular uprise. And, this selling emerges we have seen largely driven by FPIs, I suppose, and some profit taking. So my guess is that in the near term, we will muddle around in this range, but the rally will broaden. So you will see more participation from smaller and mid cap stocks, which was missing last year.
Okay, so that's the view coming in on the index level. But Mr. Agarwal also wanted your thoughts on the IT sector. TCS will kickstart the earnings season come the 12th of January. Your thoughts on what kind of expectations we should build in and the market is building in ahead of IT sector earnings?
Well, it's a very large component of the index, and we have some very large cap companies there. So and this whole space has, like massively disappointed because of low earnings growth. Uh, and investors have been quite patient, I would say, still holding on, waiting for reversal. So I think I'm not expecting any remarkable change in fortunes or change in commentary or any significant uptick in guidance. I think the management will continue to guide 2 to 5% growth, maybe lower in constant currency. So I think the problem with the whole IT pack is that large software services companies is that they're struggling for growth, and it is not that the world has changed and because of that they are struggling. Is a lot of reasons which they know and they have to fix to get back on the growth curve. So till that happens, I don't think there is frankly anything for investors to expect a double-digit return. Maybe they will become value stocks, so they'll attract value investors. But I don't think these are growth stocks anymore. So my expectations from the performance from the whole IT pack is quite low for this year.
Okay, so that's on IT. But Abhay, talk to us about retail, because so far the trend was that value retail was doing well, and it was these large big box retailers like your Trent and Demand that were coming under pressure. Given the way the quarter three updates have been so far for the likes of your Vmart, V2, Bazaar style, they're all slightly under pressure as well. Their same store sales growth has dropped. In fact, for Bazaar, it's negative 14%. Abhay, do you believe we're at an inflection point right now in retail where now what was haunting the big box retailers is also coming towards value retail, and maybe the move is completely shifting online?
Yeah, I think what my experience is that in case of retail, the big box retailers, small box retailers, is that inventory valuation and inventory accounting plays a very critical role. And I've seen this, that there are quarters when they put up sales to get rid of old inventory. With just one quarter's performance, it is difficult to say, is this a trend? What we are seeing is that value retailing, especially in non-tier one cities, is quite robust. And though you have a very strong competitor in form of online e-commerce companies, but the small box retailers have held pretty strong because a large part of customers still want to go and buy. So I would wait for 1 quarter more data to see that was this a one-off inventory repricing and getting rid of excess inventory to convert it into cash, or was it really a trend? The big boys are definitely struggling, but I think that is more of a large city phenomena in terms of footfall sales than anything else.
Okay, so that's the view coming in on value retailers, and many of these stocks continue to remain in focus today. But Mr. Agarwal, if you had to view and describe the kind of operational updates that we have seen so far, what do you make of that across the board for all sectors and your expectations from the upcoming earnings season?
Well, I'm very happy and excited to see that the small banks have come up with very robust numbers. And just before this segment, your colleague was updating you on the performance of Ujivan, CSB, Equitas. Some of these are in our model portfolio. We made a bet about 6 months ago that, look, these banks, small banks, and even some microfinance NBFCs have gone through a pretty bad credit cycle, which has got extended for 18 months to 2 years, during which they saw NPAs going up, they saw balance sheet pressure, they saw collection ratio pressure. They have taken all kinds of pressures, restructured themselves, and have come back. So it is quite heartening to see these small banks do well, both on deposit generation, improving their NPAs, and improving their margins. So it is and this is very important. These banks have to do well for the economy to grow, other than the market perspective, because these banks reach out to borrowers that the large banks at times are not able to do. So, so I think this year I will not be surprised if the small banks and NBFCs, especially those that focus on unsecured lenders, are the biggest outperformers in the market. And other than that, I think some of the electronic companies' results as they start coming in, and pharma companies also, I think would be exciting to see how their numbers are panning up.
Okay, and Abhay, what is your take on metals? Yes, very strong year metals have had in 2025. Do you believe that performance could be replicated? Maybe not to this extent that we've seen in 25, but do you believe that another similar show is on the cards this year?
Yeah, I think again, I've seen that, once metals, especially non-ferrous metals and precious metals, when they break out of a very long consolidation, and in this case, it's as long as 10 to 14 years. In many cases, if you look at copper, aluminum, then these breakouts last, because what typically happens is that a lot of mines go out of operation. It takes time to bring them back up. And the real consumers, the industries that have been pretty slack because they have never seen price hikes, do not build inventory, and then they start panicking as the rates go up because it directly impacts their margins. So I think that is the zone we are in. And if the demand for physical commodities, physical metals continues to be strong and the supply continues to be deficient, then we are definitely setting us up ourselves for another 20 to 30%, at least 20 to 30% spike in non-ferrous metals. And I think the end user industries will also have to start building that in their margin projections.
Okay, so that's the view on several sectors and the expectations from the upcoming earnings season. Mr. Agarwal, thank you so much for taking your time out and joining us here on ET Now this Monday afternoon. Thanks so much for joining us today. On that note, we need to slip into a very short break, but stay tuned. Lots more coming up on the other side.
तो यहाँ से कर सकते हैं। ये देखिए, बात समझ गए ये भी।
पांचवी ग्राउंड ब्रेकिंग सेरेमनी मुख्यमंत्री योगी आदित्यनाथ जी की दूरदर्शी पहल का नतीजा है, जिससे प्रदेश में औद्योगिक विकास को एक नई दिशा मिली है।
फियरलेस बिजनेस का एक केंद्र उत्तर प्रदेश बना है। इसके साथ ही ईज ऑफ डूइंग बिजनेस का भी केंद्र बिंदु उत्तर प्रदेश बना है और ट्रस्ट ऑफ डूइंग बिजनेस ये उत्तर प्रदेश की नई पहचान बनी है।
राज्य में फिनटेक, इलेक्ट्रॉनिक्स, आईटी, रक्षा और नवीकरणीय ऊर्जा जैसे प्रमुख क्षेत्रों को मिली नई ऊर्जा और दिशा।
उत्तर प्रदेश में टाउन ब्रेकिंग सेरेमनी के तहत न्यू रोजगार ओपन हो रहा है, जो युवाओं के लिए एक अच्छा गेम चेंजर साबित होगा।
ग्राउंड ब्रेकिंग सेरेमनी के जरिए रिफॉर्म, परफॉर्म और ट्रांसफॉर्म के मंत्र के साथ $1 ट्रिलियन अर्थव्यवस्था की ओर है अग्रसर।
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। AU
सोच बदलो और बैंक भी।
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
Anytime is a good time for multi-asset allocation funds. Invest in equity, fixed income, gold, silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
He warned the world before the last crisis. He's warning again.
Tariffs raise prices, which reduces the supply of labor and which is going to affect inflation numbers down the line as it slows the potential growth of the economy.
From a dovish US Fed to a slowing China to the real economics of AI.
It will not go to waste. The question is, will it make money for the investors? It's a question of unused capacity as much as unprofitable capacity.
And what does this global reset mean for India?
Especially moderate quality services from a growing India will be huge. But we need many, many more sort of moderately skilled people because that's where the jobs are.
Clear thinking, no noise. Raghuram Rajan with me, Aisha Faridi, on The Interview.
Back with closing trades, and the spotlight is on a bunch of consumption names today, one of them being Nykaa. Very good update coming in for Q3. The consolidated gross merchandise value and net sales value growth is expected to be in late 20s, which is positive. Consolidated net revenue growth is expected to be in the upper end of mid-20s. Now, the upper is the word that the management has added this time around in their outlook, which is looking positive because so far this metric was known to come in between the mid-20s mark. So, the upper end of mid-20s sounds good. For beauty, the segment is expected to do well. The net sales value is expected to be the highest in the last 6 quarters. House of Nykaa, Pink Friday sales, all of them have done well. Customer acquisition has been good. Net revenue growth is expected to be in the upper end of late 20s, which is in line with Bloomberg consensus estimate of 27%. Fashion, on the flip side, the NSV growth is expected to be mid-20s. It's the net revenue figure that I'm going to be watching out for very closely. It's expected to be in the late teens. Remember, in the previous quarters, it was up 21%, so early 20s, and now they're talking about late teens, which means anywhere between 17 to 19%. So that moderation is something that we're going to be watching out for, what the degree is over there. And also we're going to be watching out for the profitability of this sector as well. And they're saying that net revenue to be lower than net sales value growth due to the subdued content and marketing income and ongoing channel optimization that's taking place in the fashion space. So all in all, healthy update coming in from Nykaa. The stock has given up some of the gains from the day's high. Nonetheless, a 1.5% uptick on that stock. Kunal, a quick chart check on Nykaa. In fact, we were speaking with someone else in the morning and they did say that it's a wait and watch approach and then buy on dips. Do you believe that it's a good buy even now?
No, I would suggest the same, that the stock should be on a wait and watch move because the stock seems to be facing resistance twice or thrice at this 270 kind of a zone. Last time around also, I think the midst of November month, the stock had made a high which is around the 270, 273 levels on an intra-week basis, and then the stock drifted lower towards 250 mark. So which means potentially the stock over the last 2-3 months has been grinding into this 25-point range, 250 as a support, 275-ish as a resistance. So I think it makes sense to wait out for a point where the stock cools off a little bit more, tries to come back at a point where the risk reward is at least 1:2 or 1:3 or higher. So I think in that sense, I would suggest to wait on Nykaa and not a buy at current levels.
Okay, so that's the view coming in on Nykaa. The stock is up 1.5% today, but let's also put the spotlight on a couple of other stocks that are bucking the trend. Something like Nestle, that one, remember, is up 3%, the biggest gainer on the Nifty 50 index, followed by BEL, Eicher Motors, Asian Paints, all of them gaining in excess of 1.5%. We're also joined by Ruchit Jain from Motilal Oswal Financial Services. Ruchit, afternoon. Thanks so much for joining us today. Your thoughts on Nestle? The stock is up over 2.5% today.
Yeah, hi, very good afternoon. Well, the structure looks positive. In today's up move, the stock has breached its previous swing high. Last time we witnessed in the up move, the stock made a high of around 1300 in the month of October. That resistance has been breached, and that too, if you look at the today's volumes, then they are better than the recent average. In fact, if you look at the some of the other FMCG names as well, whether it's Marico, Nestle, HUL, all these stocks are witnessing rising volumes. So I think the sector as a whole could do well, except ITC, of course, which had a significant impact on the Nifty FMCG index in last couple of trading sessions. But Nestle, yes, if it holds the 1260, 1280 mark, then it has to potential to rally towards 1360 kind of levels.
Okay, Ruchit, hi, good afternoon and thanks for your time. Talk to us about the moves that we're seeing in some of these names. Let's pull up some names from the broader end of the market, because we're seeing very good moves in something like an Ola Electric today, up 6.25%. Metropolis Healthcare on the back of very healthy Q3 update is up 5%. A quick chart check on both of these names, Ruchit.
Yeah, so I think Ola Electric was just a bit oversold after the recent correction. So I think a pullback move has been seen over there. It could extend toward its 50-day mark, which is toward its 200-day mark, which is placed around 48 to 50 range. So I think an up move towards 48 to 50 cannot be ruled out from here.
Okay, so that's the view on Ola Electric, the stock trading at about 43 odd levels as we speak. But on the losing side, HDFC Bank. Ruchit, your thoughts? The stock is currently down 2.5%. It reported operational updates which were okay, but the stock clearly has given up most of its morning gains. Your thoughts?
So if you look at the recent past as well, the stock has seen more of a time-wise correction or consolidation over last 2.5 months. Still, we think that consolidation could continue. On the higher side, whenever the stock is rallying towards that 1020, 1040 mark, it is witnessing that selling pressure over there. Whereas 940, 930 continues to be good support. From the entire banking space, look at last couple of months, I think the momentum has been more on the mid-sized private sector banks rather than these large cap private names, where we have not seen any kind of trended moves. So mid-sized banks such as Federal Bank is there, CSB Bank is there, City Union Bank is there. That's where the relative outperformance has been seen. So I think these large cap names still should see some sort of consolidation getting continued, and relative outperformance can continue from the mid-sized private banks.
Okay, and Ruchit, your picks this afternoon amid the little pullback that we've seen in the market, any attractive buying opportunities if you're spotting?
Yes, we are looking more from the broader market itself. Minda is one stock that we like technically. We have already seen a good up move in the auto names over last few trading sessions post that auto sales numbers which were there for the month of December. Now we think that this rally could spread towards auto ancillary space as well. A lot of volumes have been seen in certain auto ancillary names, and Minda within this entire sector looks the best, where the stock has recently given a breakout from that symmetrical triangle pattern on the daily charts. So with the stop loss below 1300, we are recommending to go long on Minda for potential up move towards 1420. And within the FMCG space itself, Marico is one stock that technically looks good. It has shown a relative outperformance compared to other FMCG space over last few weeks, and today the stock has surpassed its previous high. So Marico, I think, could see a run-up move from over here. At current levels, one can go long with stop loss below 745 for potential up move towards 820.
Okay, so that's the view coming in on Marico, but shifting focus to the insurance sector then, and regulators are tightening scrutiny on insurance commissions. Sources tell ET now that the Department of Financial Services has sought explanations from insurers over rising commissions without matching growth. The RBI and IRDAI have flagged commissions as a stress area. Anurag Shah, my colleague, is now joining us with more details on this exclusive story. Anurag?
So after IRDA, RBI, now DFS is also worried about high commission in insurance industry, the increasing distribution cost which is not matching with the premium growth. So as per our sources, Department of Financial Services has returned to insurance industry, returned to Life Insurance Council and General Insurance Council and seeking explanation on the increasing commission which is not matching with the business growth, premium growth of the industry. As per the IRD report of FY25, insurance industry, including both life and non-life
insurance industry has paid more than 1 lakh crore rupees in commission only. If we talk about life insurance industry, so life insurance industry has paid around 60,800 crore in commission for FY25, and the commission growth is up by 18%, but premium growth is only up by 6.73%. For non-life insurance industry also, non-life insurance industry has paid around 47,000 crore in commission, and private insurers, private general insurers has paid a commission of 30,000 crore, and standalone health insurance companies has paid a commission of 7,000 crore. Last week, RBI has also raised concern about the increasing commission in the insurance space. In the FSR report, Financial Stability Report, RBI has mentioned that increasing commission may impact the high acquisition cost, reduces scale benefit for the policyholder. Previously, IRDA has also raised concern about the increasing commission, and the policyholder may get impacted because of a high commission. So now our sources are telling that as DFS has asked for the explanation, so in coming days, life insurance industry may submit a proposal of a deferred insurance commission. So the commission will be given to agents and corporate agents in a deferred way. For individual agents, the commission may be distributed in 3 years, and for corporate agents like web aggregators and banca channel, commission may be distributed in a 5-year time period. So going ahead, we'll see that for the insurance industry on the commission front, regulators, RBI, and now the Department of Financial Services is also keeping a close watch.
Okay, Anurag, thanks so much for taking us through details. So yes, a bunch of insurance stocks are going to be in focus on the back of that story. Kunal, your take on some of the insurance stocks. Let's open it up to different sectors, life, general, health. Any stock that stands out to you?
Well, the only chart which is actually looking attractive is ICICI Pru Life. That's something which is looking attractive. SBI Life is the only one, which is the second one, which is ranked number 2 in terms of price performance. HDFC Life has been a disappointment, frankly, over the last few months. The stock has been just stuck at this range around the 700-ish kind of a zone for a prolonged period of time. And then no major trends which is emerging into ICICI, Lombard or such other names. So I think the only one which is very strong in terms of the short to medium term charts, and especially the move which has happened in the last 2 months or has been ICICI Pru. That's something which I think at trading at 600 plus, 650 plus levels, I think is something which is also closer to its previous major highs, which was hit in the month of June, July for the stock price, as well as closer to the highs in 2024.
Okay, so that's the view coming in on ICICI Prudential. But since we are talking about BFSI, we caught up with Nitin Agarwal, head of BFSI Institutional Equities at Motilal Oswal Financial Services, to understand fourth quarter margin performance in the banking sector and the outlook ahead. Let's go across and listen in to what he had to say.
This quarter will be a mixed quarter in terms of margin performance. We will have some banks who will go on to report NIM expansion, wherein our estimates are implying expansion for banks like IDFC Bank, Kotak, Bandhan, Equitas. These banks will report NIM expansions over the quarter, even AU Bank. And some of the larger names, say like Axis, they have deferred their NIM stability or NIM improvement guidance to fourth quarter by first quarter of fiscal 27. Will see some decline. And select PSU names also will see marginal decline in the quarter. So I think margin, the movement will be very narrow in terms of the range between the decline or the improvement from here. But from Q4, you can see a more broad-based improvement in margins for the sector.
Okay, that's the word coming in from Nitin Agarwal on what the outlook is for the banking sector ahead. But on that note, time for a very short break. We'll be right back and keep the conversation going, tracking the last 45 minutes of the market.
You want to talk business? Meet me in the onboard lounge.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
In association with SBI, the banker to every Indian truly.
आदमी एक बार जीता है, एक बार मरता है, पर बीवियां बार बार ज्वेलरी खरीदती हैं, एक बार किटी के लिए, एक बार पार्टी के लिए, एक बार वेडिंग के लिए. All thanks to Candia, lightweight, everyday jewelry.
सर रोक तो आप भी नहीं पाएंगे, ट्राई कीजिए.
Oh, wow. सब पे दिल आ जाए तो
मल्टी लेयर पहन लीजिए.
This is ये मुझे चाहिए. Oh my God, this is so. देख क्या रही? मैं भी तो यही कह रहा था. ज्वेलरी सबके लिए होनी चाहिए. Candia, lifestyle jewelry.
GCCs are also contributing to about 54% of your portfolio. Just help me understand, how are GCCs, driving this demand, and which sectors particularly are powering this growth?
GCCs today around 40% of the leasing in the country is GCCs. There are around 1,950 GCCs in the country who occupy around.
Performance compared to other stocks. 1500 is where we expect the short-term up move to continue. So one can go long at current levels as well, keeping stop loss below 1350 for potential targets towards 1500.
I wanted your thoughts on SJVN. The stock is up a solid 5.5-6% today. Your thoughts on what the charts are indicating for this counter?
Yeah, this is a very strong move because 2 days of strong volume action for SJVN. I think on Friday also we saw the stock clocking almost 6-7% kind of an up move. The volumes being at 8.5 odd crore for SJVN on the cash segment. Today the volumes are a tad bit higher, almost 9 crores as compared to the stock average volume over the last many weeks, which has been maybe around 30 lakhs to 50 lakhs on a daily basis. So this has been a strong indication that the stock has come out of a major correction wave as such. Typically, and I think there have been many charts which have shown such kind of 2 days of strong volume action and price action. But then post that, there is at least a 3 or 4 days of a mild mean reversion for these names. For example, if we've seen in many of the stocks, if they move up by a margin of 15 to 20%, then there is a price correction which happens broadly for a 3 to 4% for these stocks from their swing highs. So I think that's where one should try and take advantage of. I would believe 82 to 85 could be a good range. If SJVN comes back into this kind of a territory, it could be a good zone where traders could look at a contra buy.
Okay, so that's an SJVN and very sharp uptick in this stock. In fact, when we pull up the last, let's say 1 week, 7 days stock move, we've seen this continuous exuberance coming in on something like an SJVN. The last 7 days itself, the stock is up 17%. So yes, that move on SJVN looks sustainable. But let's shift focus and take the conversation ahead in terms of the fundamentals underlying in the market right now. We have Mr. Sunny Agrawal from SBI Cap Securities joining us on the show. Sunny, good afternoon, and first wishing you and your team a very happy new year. Thanks for your time today. Talk to us about the real estate space, Sunny. This index is outperforming, a 2% uptick over there, led by names like Sobha, Lodha, Prestige. Do you believe Q3 could be a good quarter or perhaps a comeback quarter for the realty space?
Yeah, good afternoon and happy new year to everyone. It seems to be looking at a Sobha's provisional business update. It seems that anyway, December being an seasonally stronger quarter, festive season, usually real estate company tend to do well in terms of the sales momentum. So December quarter should be a pretty robust one in terms of a pre-sales number as far as all the real estate companies are concerned, especially micro markets like Mumbai, where we have seen a very strong registration data. So companies which are focused on Mumbai real estate market, a case in point Lodha, or for that matter Sunteck Realty. So few Mumbai based players are likely to do well. And anyway, real estate as a sector has been one of the worst performing sector during the calendar year 2025. And with an interest rate coming from their recent high, we believe that the sales momentum can again pick up going forward for real estate as a sector. So since, post correction now, even valuations have turned comfortable. So selective real estate companies can be looked upon. Case in point, Lodha or for that matter DLF or Prestige or Sobha, which have got an ability to penetrate into the other market to ensure that the sales momentum will continue for a pretty longer time or a longer period of time. Or for that matter, recent listing like Raymond Realty, where we find the value to be pretty attractive in terms of the potential in terms of GDP and the current market cap at which the company is trading.
Okay, so that's the view coming in on several of these sectors, but let's also put the spotlight on a whole host of defense counters. In an otherwise soft market, we have select defense counters which are bucking the trend. HAL, that one should come up for you on your screens. The stock is up 2.5%. That's Nifty Defense Index for you. That one is also holding up in excess of 2%. HAL up 2.5%. Bharat Electronics Limited also up in excess of 2.5% as we speak. Kunal, any of these stocks that you like from the defense pack, you think there's an opportunity over here?
Yeah, I think these stocks are restarting, resetting an uptrend, based on how we look at. So I think over the last 2 months or so, many of the defense stocks were going through a patch of sharper price correction. There was a bit of a divergence for these stocks with respect to the overall market movement, because earlier defense stocks are the ones which tends to participate very well in points where the markets have done reasonably well. But I think over the last 2-3 weeks or a couple of months, there was this divergence which has creeped in, where the markets were doing fairly well, but these stocks were going through their individual phase of correction. So I think that is getting reversed for the defense sector, and that's for good. BEL emerging as a leader yet again is another positive sign. You look at short covering across the other stocks, Bharat Dynamics, Massgaon Dog, GRC, etc. So I think this indicates that we are looking at a point where many of these stocks would start to now not just come back into a trending breakout mode, but more participation which could be seen, especially at a point when the markets performs very well. BEL, I think at current levels of 413, 414 where it's trading right now, I would believe should be good for at least another 3 to 4 percentage points on the higher side over the very near term. HAL, on the other hand, I would expect the stock to head towards at least 4650 to 4800 range, potentially in the next 3 to 5 trading sessions.
Okay, so that's the take coming in on some of those defense counters. But let's shift focus to pharma once again and diagnostics to be particular. Metropolis is in the pink of health on the back of robust Q3 updates. The numbers seem to be doing very well for the stock because that stock is up about 5% as we speak. Let's fire Metropolis, and yes, a 5.5% uptick nowadays, highest point for that stock. And Merrill is joining us, who tracks the sector very closely, with a snapshot of these numbers and what's keeping the stock so excited today. Merit.
Well, yes, Metropolis Healthcare has reported considerably strong numbers this quarter, with the group's consolidated revenues up almost 26% year on year. This growth was largely volume-led, which is in line with the management's earlier guidance of around 10% volume growth on the group level. Performance as well was driven by True Health Wellness as well as the company's specialty testing segments, which have recorded 35% and 33% year-on-year growths, respectively. The company has also successfully scaled its specialty business across its pan-India network. And if we look at the specialty testing channels a little more granularly, we'll see that B2C revenues have grown at 18% year-on-year, while B2B revenues have clearly stretched at 37% year-on-year, driven by the higher wallet share and a stronger contribution from core diagnostics. This momentum in preventative and wellness health checkups has fueled the company's growth, and all in all, it's had quite the stellar quarter. The market as well has taken to it quite favorably, with the stock up almost 5% in today's trade.
Okay, so the stock is up 5.5% on the back of very strong operational data that Metropolis Healthcare reported. We'll try and get in a technical view as well on this counter, but we need to slip into a very short break. We'll do that just in a minute.
In association with Bank of Baroda, play the master stroke with Bank of Baroda.
Exquisite comfort, bespoke hospitality, culinary excellence. Big words, huh? Trust me. The experience here is far bigger. That's Air India now.
सामने एक नया सुपरमार्केट खुलने वाला है। क्या करें कि मेरे पुराने ग्राहक भी रहें और मुझे नए ग्राहक भी मिल जाएं?
देखो, आप एक चाय कॉर्नर लगा सकते हो। चाय पीने पुराने कस्टमर्स रुकेंगे और नए कस्टमर्स भी आएंगे। इसके अलावा बिल्स और सेल्स देखकर हम एक इन्वेंट्री
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
Presented by IDFC First Bank. Always you first.
2026, take notes. Manifesting for my little Miss Sunshine, tickles and giggles. Also wanna be a biker chick this time. And year 2026, only love for my people and myself to manifest my best life. Nature's cosmic energy.
Now mine, natural diamond intention pendants.
My bhai, do you know any cool bank जो digital first हो?
SBI coolest है.
What?
डिजिटल लोन्स 30 मिनट में, AI मॉडल्स 140 प्लस, योनो यूजर्स 9 करोड़, डेली UPI ट्रांजैक्शंस 33 करोड़।
Cool तो है।
चलो, SBI, द बैंकर टू एवरी इंडियन, ट्रूली।
Welcome back. You're still tuned into Closing Trades right here on ET Now. And we were discussing Metropolis Healthcare before the break. The stock is up 5.5% on the back of operational data that the company has reported. Ruchit, your thoughts on the stock currently trading at 2040 odd levels? What do charts suggest for Metropolis Healthcare?
We have seen some consolidation over past 1.5 months, and the stock has formed a good support base around that 1820, 18.
Yeah, I agree with you. With a very strong update from Marico, definitely it has a rub-off effect today on the entire FMCG pack. And anyway, one has to keep in mind that September quarter was a quarter where we have seen a lot of disruption in supply chain because of GST rationalization, and December quarter being again a festive quarter, coupled with normalization of supply chain dynamics, most often FMCG companies should report a healthy set of numbers. On the top of that, on cost side, we have seen a benign input material environment for most of an FMCG consumer staple company. So if I have to identify a few companies where we feel December quarter can be pretty robust, so few companies like Britannia or for that matter Tata Consumer, Zydus Wellness, winter portfolio companies like Imami, these are the few companies which we feel can report an good set of number. One contra play can be Colgate, where we have seen a very steep correction post and muted performance during the last quarter. So Colgate, we feel now valuations have turned favorable and risk reward seems to be attractive at a current juncture. So Colgate is another stock which one can accumulate gradually in the portfolio.
View coming in on Colgate, but let's also put the spotlight on big boy Reliance Industries. That stock, remember, was gaining earlier in the day, and there are reports which suggest that the company had a tie-up with a Venezuelan oil company, because of which, but because of the sanctions that were in place, they could not import oil at a discounted price. But now, because of the change in geopolitical dynamics that we saw over the weekend, they will now be able to source oil at a cheaper price, which will of course aid their gross refining margins going forward. This was the reason the stock was trading with gains earlier in the day, although it has cooled off completely, now sitting with a cut of nearly 0.9%. Kunal, your thoughts on Reliance Industries from 1577 on the charts? Where do you see the stock heading?
See, I think if I'm not wrong, the stock made an intraday lifetime high today when it opened 1610-11 mark. But then I think it's corrected back again. So it tells you that the stock is not yet ready to try and conquer the lifetime high levels and scale past about those levels in a very strong and a powerful manner. And this also indicates that we're looking at a point where maybe I think Reliance Industries could be one of the few large cap names which could start to indicate more of a consolidation over here at current levels. And that's why I would probably believe that maybe this could have a near-term effect on the sentiment as well as on the overall benchmark indices. But it's not a stock which has been, I would say, which could probably be taken as a shorting opportunity over here, because the medium-term trend is still very bullish for Reliance Industries. I think what started off in the month of September, October, where the stock recovered from 1350 levels towards 1600-ish kind of a zone, which the stock tested today, indicates that this is a powerful trend in the making for Reliance Industries. but it's just that maybe at the 1700, 1600 levels, the stock is facing resistance. So there could probably be maybe few odd days of price cool off consolidation, but that should be taken as an opportunity where traders could try and participate, accumulate, or maybe add positions on dips.
Okay, so that's on Reliance, and lots has been happening in this entire oil and gas sector. Do we still have Ruchit with us? Would like to take a technical view from Ruchit as well on some of the other names that we are seeing from this space. Ruchit, ONGC, another stock that's been doing well. Your reading on the charts from on ONGC?
Broadly, it has been to a consolidation phase over last few months, and 250 to 55 has acted as a resistance whenever it comes up over there. Whether it being June 2025, the stock reacted from those levels, to hit a low of 225, and again recently in the month of October also, towards the end of October, we saw that the stock was not able to surpass that range. So I think if whenever the stock surpasses the 250, 255 resistance zone, then we could see a trended phase. Otherwise, as of now, the short-term trend remains consolidation.
Okay, so that's the view coming in on ONGC, but let's put the spotlight on CSB Bank. That stock is up 17% in trade today. The biggest gainer on the Nifty 500 index. In fact, it is now crossed that 560 mark. Sunny, your thoughts on CSB Bank fundamentally, and then we'll try and get in a technical view as well on this counter.
A very strong update by CSB Bank as far as the provisional numbers are concerned, and the stock is reacting to that. I think one of our fastest growing bank, predominantly led by the gold finance book, and the performance even during the September quarter was very robust. So seems to be a kind of re-rating candidate, and that is the reason we are seeing an uptick in the trade today. As we speak, trading closer to 1.6 time, 1.6, 1.7 time 1 year forward price to book multiple, where we feel as compared to the other larger peers which are trading closer to 2.5 price to book, there is still scope of further rise from here. But maybe buy on dip is the right strategy which one can adopt in CSB from a medium to long term perspective.
Okay, so that's on CSB Bank. Kunal, what about some of the other smaller banks that Harsh was talking about in the morning? We'll get to that, but before that, here's a conversation to watch out for as the budget 2026 approaches. ET now hits the road with Budget Yatra 2026, a nationwide journey beyond boardrooms and balance sheets. From industrial clusters to startup hubs, trading floors to factory floors, we bring you ground-level voices shaping India's budget expectations. Now we begin in Odisha, then head to Chennai and Indore, capturing what India Inc. MSMEs, investors and workers want from the Budget 2026. Here's Jude with a sneak peek.
On ET now, we're traversing India's top cities and industries, all in the hope to find answers to just one question. What does India Inc. want from Budget 2026? So from Odisha's discoms to Chennai's auto component corridors, we put the focus on policy, growth and budget wish lists. So join me in Chennai as I track how the Trump tariffs have impacted business at auto ancillary industries and whether the component ecosystem is keeping up with India's big EV shift. And we'll be bringing you these stories through exclusive conversations with the voices that matter. All this on Budget Yatra 2026, only on ET Now.
Spotlight on a couple of other buzzers in trade, something like Ujivan Small Finance Bank, that one is up 5%, and CSB Bank, we had to get a technical view on this counter. Kunal, both these counters, what will your view be, CSB Bank and Ujivan Small Finance Bank?
Yeah, I think both of these charts are very attractive. In fact, CSB Bank today has done exceptionally well price performance wise. even on a quarter basis, even on the last 1 year basis, the stock has done exceptionally well. I think it's moved from a band of 300, 350 mark to now 500 plus levels in a quite comfortable manner. But initiating a buy at these levels, I would be a little bit wary, because I think we've seen many a times that when momentum is at its peak, the price patterns and the news flow is extremely positive. But then once the momentum drops down, you see these stocks correcting or going into a cool-off mode. So we'll wait for that point for CSB Bank to try and come back into that kind of a cool-off mode.
Kunal, that's on CSB, and earlier we were talking about some more smaller private banks like your Equitas, your AU Small Finance Bank. How are they shaping up on the charts?
Yeah, they are looking very attractive. In fact, just to add the point on Ujivan Small Finance Bank, many of these banking names are coming back after weeks and months of underperformance. In many cases, even quarters of underperformance. AU Small Finance Bank was a stock which was stuck into a range around the 700, 750 mark for a prolonged period of time. But in the last 1 or 2 quarters, we've seen the stock not just breaking past about the 4-digit levels, but then the momentum has been very strong, and these stocks have ended their respective phases of major consolidation. So that, I think, is a positive sign, and especially at a point when the banking stocks required not just the PSU banking names, but the private sector banking stocks which needed to fire up. So I think in that sense, it's a good mix to try and see many of these mid-cap private sector banking names looking quite strong. I would be bullish on names like Equitas, Ujivan Small Finance Bank. I think that's a stock which is looking fairly attractive, and even AU Small Finance Bank. I think all 3 stocks are looking fairly attractive from a medium to long-term time scale.
Okay. Kunal, by any chance, do you track Cupid? The stock is down, what, 6.5% today? It was down about 20% on Friday as well.
No, I don't track it.
Okay, you don't track it. Fine. All right. Let's also talk about a couple of other stocks then. Something like Cyient. That one is up 4.5% in an otherwise tepid market. But remember, IT stocks are under pressure today. Despite that, Cyient, that one holds out, up 4%. Kunal, your thoughts on this counter?
So, so on the IT pack first, I would actually expect that maybe I think at the start of this calendar month, the IT index would go into a little bit of a, on tenter hooks as such, going into the results, because that's where you would probably expect the, the last 2-3 months of price performance indicates that the, price move was very strong for large cap, mid cap IT names. But then I think, there's bound to be a mean reversion of sorts, and it's a good sign that these stocks are going to a moderation of sorts. Just around the results, for these names. So I would believe that that should be a good opportunity for short-term traders to try and venture into large cap IT stocks. Talking of Cyient specifically, yes, that stock is shown a good bounce back from its previous major swing lows. But then when you look at this long-term trend for Cyient, or maybe over the last 1 year or so, the stock has still been into a downtrend, and it's almost consistently forming a pattern of lower highs and lower lows. In these kind of patterns, we wait for the confirmation in terms of a breakout. That level is 1180 for Cyient. So till the time the stock doesn't break above those 1180 mark, I'll just about maybe go into a zone where the stock may be in a wait and watch mode or into the radar and not into a buying position.
Okay, so that's on Cyient. Sunny, talk to us about some of the beneficiaries of the electronics component manufacturing scheme. Today we've got one more name added to that list, that's Samvardhana Motherson. On Friday we had announcements for Dixon and Amber. What is your take on how beneficial this PLI scheme could be, and what is the sector outlook here?
We are definitely looking at a success of earlier PLI scheme. It seems that most of the companies which have been part of this new PLI scheme will definitely tend to benefit, as we have seen because of PLI-led manufacturing incentive. Most of the companies have been able to scale up their capacity and ramp up the business. If I have to identify one stock, so I think in the current recent announcement on PLI, Amber Enterprise seems to be one of a key beneficiary, where 2 of its unlisted subsidiary can definitely avail this PLI incentive over the medium to long term perspective. So I think Amber Enterprise is the one stock which one can look forward to. But one has to keep in mind that the benefit of the PLI, it takes slightly longer long term, as most of the investment will start pouring in, and then the fruit of investment will start bearing after 12 to 18 months. So one has to keep in mind that it's more of a long-term positive for the entire sector, and Amber seems to be one of the key beneficiary of the recently announced PLI scheme.
That's the view on Amber Enterprises. The stock is up over 3% in trade today. But Ruchit, any BTST or STBT trades that you would like to share? Okay, Kunal, that question is for you then. BTST, STBT calls.
Yeah, so I think delivery is something which is looking attractive at current levels. The stock at 410 kind of a zone. It's forming a triangular pattern on the daily chart. So that's a trade which I would believe would start to look attractive at current levels. 420 to 425 could be an immediate target for the stock price on the higher end, and 403 as a stop loss. Sale, as we were discussing earlier, that the entire middle pack looks extremely strong, and many of these stocks have started to show signs of a fresh breakout. Sale is one of the stocks which is showing signs of a similar breakout, trading about 150 levels. Would look out for 155 as a near-term target. Stop us at 147.5.
Okay, delivery and sale looking good to Kunal. But Sunny, I'm surprised seeing the move today on Sapphire Foods and Devyani International both after the merger was announced on Friday. At least on Friday you had Devyani that was up 7% and Sapphire was under pressure. But today Sapphire is lower by about 7% and Devyani is also lower by 5.5 to 6%. Your quick take on the merger, Sunny, and any possible reason the stocks could be reacting like this?
Yeah, definitely. I think the merger, because of merger, there is likely to be a synergy which will play out over a medium to long term as we speak. And obviously, the synergy the benefit of the synergy will take some time, wherein the management has reiterated that closer to 200 crore kind of annual synergy can be derived from both the businesses. But one has to keep in mind that the approval for merger itself will take 5 to 6 months, and then post that the benefit of synergy will play out over the period of 12 months. So I think it will be a span of closer to 12 to 18 months post that, where we will see a benefit of this merger, which will start reflecting in the financial performance of a merged entity. And at the same time, one has to keep in mind that the entire QSR sector has been struggling in terms of weaker same-store sales growth, and that has been one of the reasons that most of the QSR companies has not delivered a very healthy return during the last 2 years. So maybe since now Street is aware that the benefit will reflect in the P&L after the span of 12 to 18 months, maybe today we are seeing some kind of profit booking in both the counters.
Okay, so that's the view on Devyani International, but let's also put the spotlight on IDBI Bank. The stock is up 8.5% in the last 5 days. Kunal, do you track the stock? It is down 3.5% today, but we've seen quite a bit of action over the last few days.
Yeah, this is a very strong chart in the making, even though I think today the stock is down. And this typically happens because when stocks move up by a margin of 5-10% on the back of some major jump in volumes, it's bound to be that the stock first goes into a mild profit booking. The weaker hands, they are the ones which tend to ebb off the positions. But then that's where the trends or new trends starts to shape up. The best part is that IDBI Bank, after this kind of a price uptick move, I think has not retraced 50% of the entire candlestick body which the stock had shown on Friday. That means that the stock has good support at 105 to 110 range. So I think keeping 105 broadly as a stop loss or a support for IDBI, I would expect that the stock could head back towards 118 to 120 range. So the risk reward is also fairly positive for traders to look at a buy at current levels, as well as a mild further dips for the stock in the next couple of days.
Okay, that's on IDBI Bank. Only a couple of minutes left for the markets to close. Sunny, we're just understanding that Torrent Pharma has greenlit a 12,500 crore fundraising plan, and you were talking about pharma stocks. Quickly, any other names looking good from that space?
So I think within the pharma space, we believe the weight loss drug is a category which will see an exponential earning growth over the period of next 3 to 5 years. So few companies which are focused on GLP-1 as a segment. So one source specialty is the one stock which we are recommending to our clients, wherein we believe that beginning Q3 and Q4 onwards, you will see a commercialization of the drug playing out for the one source. So one source is the one stock which we are recommending to our client. Another proxy play to the GLP-1 is the Shelly Engineering and Plastic, which is which will be making an injector pen for all these drug dosages. So Shelly Engineering is another proxy play as far as the GLP-1 is concerned from a pharma space. From a frontline companies, I think Lupin is very well placed to encash on the growth opportunities in US, where we have seen that a biosimilar is the segment which will which will be one of the key growth driver for the Lupin. So Lupin is one of the stock from a large cap pharma space.
Okay, Sunny, thanks for that quick take. About a minute and a half left, so let's start winding down for the day, starting with where the Nifty is. Sunny, before that, thank you so much for your time. But yes, viewers, let's start wrapping down. Day's low below 26,250 is where we are at. About 0.3% cut on the Nifty, 0.4% cut on the Sensex, 0.2% cut on the Nifty Bank. Below that 60,000 or around that 60,000 mark for Nifty Bank. India VIX has cooled off slightly, now about 6% higher and around that 10 mark as well. It's names like Nestle, BEL, Eicher Motors, HUL, Tata Steel, Axis Bank, Ultratech Cement. So the Nifty gainers are diversified across sectors, but it's FMCG largely that's shining, with names like Tata Consumer, Nestle and HUL making it to the list on the back of very positive Marico Q3 update coming in. On the flip side, deep cuts on HDFC Bank, about 2.25% lower. Wipro's lower by the same amount. Infosys, HCL Tech all seeing cuts of more than 2%. And then you have ONGC, Bajaj Finance, TCS, Max Health are some of the biggest losers. The advanced decline ratio slightly skewed towards the favor of the declines. And out, it's the day of the Realty stocks today. Sobha is up 6.5%. Prestige, Lodha, Godrej Properties, DLF doing well. Sobha on the back of its Q3 update, followed by FMCG, Metal, PSU Banks and Auto. But under pressure today, you have Pharma, Energy and IT. And like we told you, more than 2% cut on a bunch of these IT names. Other than that, big moves on Ola Electric, Netweb Tech, Sobha, Metropolis is up 6.5% on strong Q3 update. SJVN continues its run. Motherson Sumi Wiring, PG Electroplast, Cyient, Credit Access. These are some of the top gainers from the Nifty 500. And on the flip side, it's Ather Energy, Sapphire Foods, Premier Energies, Devyani International, Vari Energies. Remember, there's a bearish brokerage note on Premier and Vari both. M&M Financial, IDBI Bank, Transformers and Rectifier, Chalet Hotels. All of these stocks are trending lower. That is how we're wrapping up for the day. And let's take it to Kunal for a final closing comment. Kunal, your take on where we've shut shop today. 0.3% lower, and we've not been able to defend that 26,250 mark too.
Yeah, but I think today's move was more like the markets trying to digest the gains which you've seen in the last 4 to 5 days. End of the December series, start of the Jan series, we've moved almost 250-300 points for the Nifty in that sense. So it's a good sign that the markets are just about trying to digest this kind of a gains. I was actually looking at the option activity throughout the day for index, and it was clearly getting defined that 26,400 and 26,200 are the two strikes where there is a huge amount of or incremental amount of call shorting as well as put writing respectively. So which means that the markets are defining this 200-point range going to the weekly expiry tomorrow. And generally what happens is when the markets go either slightly below the ranges on the lower side or above the ranges on the higher side, that becomes an opportunity to go for a contra trade. So I think in case of the market opens with a slight bit of a down drift tomorrow and we fall sub 26,200, that's a very good opportunity for intraday traders to try and go for a contra buy.
Okay, so that's the view coming in on Nifty and where the market could head in the short term. But Kunal, thanks so much for taking your time out and joining us. With that, it's a wrap on this edition of the show. Thanks so much for tuning in. More news and updates will continue on the other side.
In association with SBI, the banker to every Indian truly.
Exquisite comfort, bespoke hospitality, culinary excellence. Big words, huh? Trust me, the experience here is far bigger. That's Air India now.
Anytime is a good time for multi-asset allocation funds. Invest in a mix of equity, debt, gold and silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Presented by IDFC First Bank. Always you first.
2026, take notes. Manifesting. For my little Miss Sunshine, tickles and giggles. Also wanna be a biker chick this time. And year 2026, only love for my people and myself. To manifest my best life, nature's cosmic energy.
Now mine, natural diamond intention pendants.
देखिए आप तो राजा हैं,
बस एक आवाज लगाई और सारे काम हो जाते हैं। ऐसे ही IDFC फर्स्ट बैंक की ऐप से NRI कस्टमर्स जहां भी हैं वहां से उनके बैंकिंग के काम हो जाते हैं। फिर क्या है, घर बैठे बैठे अकाउंट खोलना हो या इंडिया में इन्वेस्टमेंट्स करने हो या फिर इंटरनेशनल नंबर पे UPI एक्टिवेट करना हो तो यहाँ से कर सकते हैं। ये देखिए, बात समझ गए ये भी।
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
सर स्क्रिप्ट चेक कर लीजिए। ये क्या कर रहे हैं सर?
कट कर रहा हूं ताकि लोगों को क्लियर समझा सके। समझ गए? अब लग जाओ अगले पे।
रंजीत कुमार के साथ क्लियर कट, टाइम्स नाउ नव भारत पर।
Ajay Srivastava, Managing Director at Dimensions Corporate Finance Services, joining us. Ajay, great having you. Let me first start off. You've been cautious with regard to Indian markets. What's kept you cautious? Is it the fact that valuations have run up or you're not expecting earnings to run up as much as many are penciling in? What's keeping you cautious, at least where Indian equities is concerned?
I think good morning. I think it's not about just being about Indian equity. 2,74,000 crore being sold out by a bunch of all overseas global investors universally across board sends you a signal that something they're doing right and something we need to be cautious about. So when you people vote for 275 lakh crores getting out of the country, you need to heed that advice and you need to follow it. Number two, as you already seen, what's already played out in the market, what we've been saying, that the capital allocation needs to move away from equities, which all of us have done in the last 1 year or so. And you've seen the results of what's happened in the precious metal, etc. And third, the global markets. So I think it's not just you being negative on Indian equity, but also the fact that you need to diversify. India is just 4% or 3% of the global market. And commodities, of course, now you've seen after what happened yesterday in America and Venezuela put together, gold has become the major item that you must hold on a portfolio. So it's more about diversification. And, when so much of sales happen by so many global companies and all of them are smart money allocating elsewhere, you need to follow their advice. And therefore, you need to, for our purposes, capital is limited. That's one. Number two is you need to look at risk-weighted returns. It's not necessary that you got 10% in India over the year. That's good enough. You took huge risk in India and equities, and therefore you get 10%, which is like a FD rate or just about there. That doesn't make sense to us. So I think it's capital allocation, sell-off, and Indian valuation all put together. We still have stocks in 70s and 80s Ps. Nowhere in the world do you have these stocks. Until they persist in the system, we will remain very cautious on Indian equities. And in fact, we are short on a couple of stocks at this point of time. And wherever we see P over 50 and growth is not commensurate, I think it's a fair game to believe that those stocks will correct down.
Ajay, therefore, are you preferring some of the contra plays? Something like an IT? Do you expect that to bounce back? And are you finding favor in terms of valuations there as well, especially in the large cap end? Because you mentioned you're not comfortable with 70, 80 times earnings. Would IT therefore be your go-to?
See, IT is not a go-to because as you see in Indian market also, they have only performed where government policy changes. Nobody expected at the start of the year GST to be brought down for autos. Auto GST came down, autos outperformed everybody. You saw end of the year, there's a steel tariff come in place, and suddenly you see the steel companies doing it. At the end of the year, you saw cigarette tariff going up, you got an ITC going for a hammer down. So I think India is still subject to a lot of policy guidelines, that is one. Number two is Indian monopoly is doing well. There is no problem monopoly in India. So you don't need to change the thesis. Thesis has been auto, metals, one or two banking institutions, nothing much on banking side, but the focus, and of course telecom, the focus